Okay. How do you size? Someone's asking, how do you size appropriately in day trading? And I did touch upon this. You have to size based on the part of your trading plan that details your loss. So you start off with a maximum loss per day. You divide that by 3. Give yourself 3 chances. All right. Don't utilize your whole maximum loss per day on one trade. So if your maximum loss per day is 300, you're going to divide that by 3 to get a $100 maximum loss per trade. Now, if you get into a trade that has a 10-cent stop, you can play 1,000 shares because that's going to get you $100 loss on that play. All right. So that's how you size. But if your stop is 50 cents away, you can only do 200 shares because 200 shares times a 50-cent loss is a $100 loss. You must apply size. Your plan dictates size. It should not be a random decision. Oh, I just feel like this one's a big play. Or I feel like this one's a small play. Everything should be rule-based in your trading. Consistency can only come from doing things consistently. And by, whimsically deciding randomly this trade doing this and another trade doing that is impossible to get consistent performance from that. All right. So everything has to be rule-based, and you should be able to map out a trading plan on a single piece of paper that's no longer than 10 bullet points. I believe that 10 lines, your trading plan should basically consist of 10 bullet points or 10 lines. You should be able to put that on one small piece of paper. Because if your trading plan is you're flipping pages to go through your trading plan, you've gone way off the deep end. This game is not that complex. All right. You are the complex one. The market's the simple one. All right. You bring the complexity to the market. The market's simple. It's got 3 directions: up, down, sideways. All right. That's a rudimentary, and it's neutral, meaning that it doesn't do something different for you than it does for me. So that's the tool in our toolbox, like a hammer or a saw. The market's a neutral tool. It's whose hands is the tool in that makes all the difference in the world. So you bring the complexity. All right. But so if your plan is overly complex, you're lost already. It should be a very basic 10 bullet point plan that covers these categories. Identifying what events do you identify as trades? Do you know how many traders don't know that? Like I asked them, okay, so explain to me one of your buys. What's an actual buy that if this occurs, you don't have to think, you just hit the buy button? And most traders can't even tell me what their buy is. And they said, oh, I buy when I think it's going to start going up. Like, that's not a plan. What? When you think it's going to go, I think it's going to go up, Oliver. Would you give your money to someone would you give your family's savings to someone who says, I think it's going to go up, right? You can't trade like that, right? You got to know this is a buy. When this happens, I don't think, I don't doubt, I don't hesitate. I don't call up the psychic hotline to determine, to get some advice. I just hit the freaking buy button every single time this happens. And you should have at least 4 of those. So what do you identify as buys? You should have at least 4. All right. You should, part of your plan should be a stop plan, your maximum loss per day, your maximum loss per trade. You should have an ad plan. There is no big trader ever that has ever walked this earth that does not add to their winning plays. Not one. And if you don't have an ad component to your trading plan, you will never be a big trader, ever, ever. It's impossible. Every big trader knows when to add and by how much. And sometimes there is no add and sometimes there is, but you've got to know that. And that's got to be mapped out in your plan. I add under these two scenarios. What are those two scenarios? All right. My traders have two add scenarios. When any of those add scenarios happen, boom, no thinking, no doubting, no guessing, no wondering, no let me check and verify. It's boom, hit the buy button. You understand? And you should have I know how to identify my opportunities. I know my maximum loss amounts. I know when to add to every winning play. All right? I know the exactly when to add and by how much. I know I have three ways that I take a profit. I take a profit under these three scenarios. And if it's not one of these three scenarios, I sit on my freaking hands. All right. And you should know how to adjust your risk. All right. So your initial stop doesn't stay. Excuse me. Your initial stop doesn't stay your initial stop throughout the whole trade. So when do you adjust that? And by how much? And those are the components of a trade. How many of you know all the components of a trade? Probably very few of you. And if you don't know how to break the components of a trade down, how to break a trade down into its components, then you can't know how to map out a trading plan, because a trading plan is dealing with each one of those components properly. And so there are millions upon millions of traders that are just randomly throwing money around in the markets. And that's what creates a markets. That's where my profitability comes from. That's where the profitability of some of my traders come from. It comes from the random group out there just throwing money around because they think it's going to go up, right? I think that's their trading plan. This is it. This is how it looks. This is how a lot of your trading plans look. I think that's it. And you can't think your way to great trading. It's just not going to happen.